Welcome to the Commonwealth Bank offices here. Sort of this building's only been up for a very short time, or occupied by the Commonwealth Bank staff for a fairly short period of time. And I understand the venue up here really kicked off at the end of February, so it hasn't been used that many times. So kick a few tyres, make sure sort of it does work sort of fairly well. We want to give it a good test run. So I am wearing sort of microphone. It's probably a bit overkill with my voice, so I'm tending to be a little bit loud at the best of times. But I'm also wearing another mic, so for the cameras tonight. So Solace will be using that later on, sort of no doubt, sort of blackmail against me, sort of if my forecasts are wrong. Now, I don't know whether you've heard from an economist beforehand. If you have, I apologise for that right at the very beginning. I hope this is different. Look, I don't want you to go away from tonight, sort of knowing what the latest inflation rate is or the latest unemployment rate. Now, that may be great if you go to a trivia night, but sort of no use to you in terms of your day-to-day sort of operations. Now, sort of there's a number of you that are retired, some are in the workforce. Sort of you've all got sort of different sorts of interests and focal points. Some have got shares, some have got sort of property, but what I want you to do, the simple thing that I want you to do tonight is to be able to say, so what? What does this mean for me? What does this mean, if you're still working? What does this mean for my clients and customers? What does it mean for my friends and family? I think if you do that, and you're constantly bringing it back to home base, then it becomes real, it becomes tangible, it becomes useful. Now, I want you to go away from today telling sort of all your family and friends, I went to heard an economist and I got something useful from it. Nobody's ever going to believe you, but so hopefully that will be the case. So certainly that's what I encourage you to do today, ask the so what question. Now, if you want a copy of the presentation tonight, certainly not a problem. Sort of see any of the principals at Solace, sort of see any of the colonial First State people, and we're happy to give you a copy of the presentation. Why can I say that? Because it's got this slide in it. The disclaimer slide, the legal slide. I haven't whipped around the room. I don't know your own personal circumstances, so it's very much of a general nature. Now, sort of, no, we don't play favourites here, sort of at the Commonwealth Bank Group. Sort of the managing director, I've done a presentation to him, he gets slide number 2 as well. So it doesn't matter who I'm talking to, so we've got to put up, so that. So certainly that's the only, sort of administrative stuff before we get into the presentation. Now, 2016, we're not 4 months old in 2016, but it seems longer, doesn't it? Doesn't it seem longer? Certainly, sort of the share market and the currency markets have got off to a fairly inauspicious start. So we've had a lot of volatility. So we went through into February and March, and I think most of the major markets were down around about 10%, and looked as though it was going to be a pretty bleak year. But we've all of a sudden, so we've bounced back, and I'm happy to report that the share market was up by 22 points today, and we're in the black yet again. I'm happy to report my forecast in terms of the share market looking good at the moment, but so ask me tomorrow, it may have changed a little bit. But it is an interesting sort of environment. I think it's the first time I've done a presentation where I've got the oil price there as my first chart. And that's because we're preoccupied with what's happening in the oil market. And it is quite intriguing because the oil price has been plunging, gone from levels like $100 a barrel to around about $40 a barrel. And ordinarily, we would view that as a good news event. If we're filling up with petrol at the petrol station, it's costing us $1 a litre rather than $1.40 a litre. It's got to be positive, hasn't it? It's got to be sort of a good thing. But the concern that's been on the markets is that if the oil price is plunging, what does that mean for the oil producers? Are they going to get themselves into trouble? Are they going to go belly up? And what does that mean for the banks? And of course, the banks have gone through the global financial crisis, and we've had so those sorts of issues. So that's been very much a focal point. What does that mean for the banking system? Now, fortunately, that uncertainty is starting to get resolved. We've had so many questions. There's plenty of answers, but no definitive answer. Now it does look as though, and so, well, look, it doesn't look as though there's going to be great catastrophe for the banking system. it looks as though we're going to be able to manage through this process okay. So that's so far so good, and that's why we have seen a degree of stabilisation that's happened. Now, what about the Chinese economy? A lot of questions about the Chinese economy. Chinese economy is it slowing down too much? So what's the implication of something like that, particularly for the global economy, but more importantly for us here in Australia? Well, in the last week or so, we've had some really good economic data coming out from China and showing that the Chinese economy is continuing to hold up okay. US interest rates. Late last year, we had the US lifting interest rates for the first time in a decade. There was a lot of fear and say, well, how many times are they going to lift interest rates over 2016? Is the economy going to slow too much? A lot of fear about that. But it's also clear in terms of the United States that they're going to take their time in terms of lifting interest rates. And then we've got US politics. That's the reaction I get actually when I'm travelling around the country. So and there's the same sort of reaction when I say President Donald Trump. He had a big win today. Hillary had a big win today as well. And it looks as though it will be Clinton versus Trump. Stranger things have happened, but it's an amazing time that we're living in. This is something that's got to be on the radar screen because it's one of these things that the markets is going to get more and more preoccupied with the closer we get to November. So one of the things on the radar screen. And geopolitics, so there's always going to be countries that don't get on with one another. And we had that over the weekend with Saudi Arabia and Iran. And Iran said, look, we've only just come back to exporting oil. Sort of what we don't want to do is, sort of start to freeze production. Saudi Arabia said, we're not going to have an oil freeze unless you're part of it. And as a result, we had that lack of agreement in terms of an oil freeze. But the oil producers seemingly are going on okay. We've had the oil price rebound and it seems as though it's continuing to settle around about $40 a barrel. So there's been a lot that's happened in a fairly short space of time in 2016. Looks though things are starting to settle down. Now, it is quite an amazing environment that we've had so much concern because the global economy has actually been doing okay. This is where we are here, 3.2% growth in terms of the global economy. Now, it's a little bit below the longer term average. And the simple conclusion is, particularly with super low interest rates, we could be doing better. The Reserve Bank Governor said that, sort of about Australia, saying, well, look, we really could be doing a lot better than what we're doing at the moment, but we're still doing okay. And when you think about it, you've seen there's the global financial crisis, there's the last recession. We are still doing okay. The growth is still happening, but it's below the longer term trends. Now, this is where the growth's coming from. The global economy is expected to grow by 3.2% this year. And 1 percentage point out of that 3.2 is going to come from China. So China's important, not just important in terms of Australia, but it's important for the global economy. And it is powering ahead and providing that contribution to global economic growth. The United States is up there, India is up there. You can see a number of Asian economies there contributing to global economic growth. You can see a number of European countries. So Spain's there. France is there, Italy's there. Greece is not yet there, so it's not up there. They still haven't worked out that you need to go back to work. So once they work out that, then it's all going to be fine. But global economy is actually doing okay, and this is something, again, the Reserve Bank Governor highlighted. He said, we've had all this volatility, we've had all this concern, but people aren't focusing on the fundamentals. The fact that the global economy is actually tracking along, quite nicely. Now, if there's two countries that we need to be focusing on, it's the United States and China. And here's a good time to utilise or to exercise that so what question. US inflation is at 1.7%. And you might be saying, well, so what? That's really nice for the United States that they've got low inflation. What does that mean? Well, if the inflation's under control, they're looking for inflation to get up to 2% or even higher, but they're still well below what their target level is of 2%. If inflation's under control, why do you need to rush and lift interest rates? Why do you need to be aggressive in lifting interest rates? So they're saying we can take our time. As a result, the currency markets have looked at it and said, well, as a result, we're not going to be putting so much in the United States economy, we're going to put it in other places. So the US dollar has lost support, and that's one reason why the Aussie dollar is so high. Today, the Aussie dollar is sitting at 78 US cents. And if you're planning that trip overseas, particularly going to the United States, you're quite happy about that situation. But that's one of the influences, that's one of the so whats. It's great news for consumers, buying goods from the States, or if you're travelling overseas. But for those people out in rural and regional areas, when I said that down in Albury, they weren't happy about the fact that the Aussie is at 78 cents because they're looking to export their goods to other parts of the world. They would like a more competitive currency, one which is a fair bit lower. So keep your eye on the United States. Again, the share market has been pretty good of late. Why? Because a lot of investors are concluding that the US Federal Reserve is going to take its time in terms of lifting interest rates. That means growth continues. That means the share market continues to rise. Now, what about China? It's a little bit disappointing in China. The Chinese economy is only growing by 6.7%. It's disappointing, isn't it? That's the way that the media is portraying it. The slowest growth rate that we've seen in 25 years. Well, is it disappointing? No, it's not disappointing at all. Chinese economy was expected to slow down, and guess what? It is slowing down. Chinese economy was expected to change, and indeed it is changing. It's no longer being solely driven by the mining or the construction or the engineering sector or the export sector. It's being driven more and more, and that's the expectation. It will continue to be driven more and more by the consumer sector, by Chinese consumers. Good news or bad news for Australia, it means that we'll have different winners in future. Now, the Chinese are hitting the roads. They're travelling around the world, and indeed China, mainland China and Hong Kong are now the biggest source of tourists here in Australia. For a long period of time we thought New Zealand was going to hold that for forever and a day, but China has actually passed New Zealand as our biggest source of tourists, and they're coming to Australia, they're looking at all the sites. They're also going to Coles and Woolworths. What are they doing in Coles and Woolworths? Well, my offsider, Savant, he saw all these Chinese tourists in Coles and Broadway in Sydney, close to the Sydney CBD. And they all went to the checkout, and then what were they carrying under their arms? Tubs. What were they full of? Milk powder, that's right, so baby powder. They love our vitamins, so they love our milk powder. And they're increasingly loving our wine, our beer, our beef, so that presents tremendous opportunities for Australian industries, for the Australian agricultural sector. And we are very, very positive on rural and regional Australia and their prospects because of Asia, because of China, but Asia more generally. Their income levels are rising, and they want to embrace the sorts of things that we produce here in Australia. So it's different. China is still important, but the winners and losers are going to be a little bit different as we go down the track. Now, what about Australia? Now, I have to stop at this point in time and say we are doing okay. Am I the only one who does this? The Reserve Bank Governor does this. He stops halfway in his presentation. He says, look, now what I want you to know is we're doing okay. You might read in the media and get this perception that we're not doing okay. We are actually doing okay. Here's where we are now. 3% growth in terms of the Australian economy. The speed limit of growth is probably around about 2.75%. The longer term average is around about that sort of level. So we're doing okay at the moment. This is world leading economic growth. Even the United States is not growing this fast at the moment. Now, why do I say that we're doing okay? Because we do look at a range of data and so we basically tick them all off. So let's have a look at the jobless rate. It's at the lowest levels in actually 2.5 years. The trend jobless rate at 26-month lows. The seasonally adjusted rate, lowest levels in 2.5 years. We've got record car sales. More homes are being built now than have ever been built beforehand. More tourists are coming to Australia. And our spending? Well, Queensland's spending's not going gangbusters, but when we look right the way across Australia, spending levels are actually pretty good. We look at a whole range of indicators. We also look at number of people who are travelling on aircraft. We look at weather data as well to be able to give us, sort of idea of the influences on the economy. And we look at all the data and we conclude the economy is actually doing okay at the moment. Unfortunately, it's not really replicated in terms of the media, sort of coverage of it. Now, what's driving the economy is very much the housing sector. More homes are being built. A few years ago, it was the mining sector. So iron ore and coal were very much, sort of in their element. But now it's the case that interest rates are super low. Population has been rising. We need basically more homes to be built, and those homes are being built, sort of at present. We've got investors in the market. We've got superannuation funds, self-managed super in the market as well. They're investing in the housing market. So this is really positive. Now, when we say more homes are being built, people say, well, that's nice. But what we need to do is be able to say, let's think about it a little bit more closely. If more homes are being built, before you build a freestanding house or an apartment building, you've got to get a quantity surveyor, you've got to get an architect in. Then you get the builders, then you get the brickies and the chippies coming through, the sparkies. You get the curtains and carpets and light fittings, so you get landscape gardening. So there's so many professions, so many businesses that are getting boosted by the fact that homes are being built. And you've only got to travel in Brisbane, coming in from the airport and look up to the sky at the number of apartment buildings that are being built, the number of commercial buildings that are being built. Now, it's a little bit scary too, because Queensland population is slowing down a bit, but a lot of homes are being built, a lot of apartments being built. So you do hope at the end of the day that it's not going to end all in tears. And that's one of the more salutary sort of elements that I've got in terms of my talk today. It is actually interesting about apartments, the demand for apartments rather than freestanding houses. And this shows you the changes in the generation. Back in my day when I got married, so wife and myself said, well, okay, we want to go somewhere out in the suburbs somewhere. We want a quarter-acre block, so maybe an hour commute, and that was the dream. That's what you wanted to do. But now, the Gen Ys and the millennials are saying, no, what we want to do is live close to the CBD. We want to live close to offices and cafes and restaurants. Yeah, we want to perhaps own a home, but perhaps we'll own a home a bit further out and we'll rent it out. Where we want to live is actually in the CBD. So we have got this greater demand for apartments in the current environment, and showing a different change in terms of Australia. Now, one thing that we need to focus on is the fact that population growth is slowing down. And that means in future we won't need as many apartments and freestanding houses, and that could lead to some softer home prices. So we've got to watch this situation carefully. Certainly the Reserve Bank has got to watch it fairly carefully, and watch the rental market in particular, because if the rental market softens and vacancy rates rise, then so there will be concern about what that means for the broader economy. There's Queensland. You can see Queensland is part of the happy family. Sort of Sydney and Melbourne, sort of doing very, very well in terms of building at the moment. That's happening right the way across Queensland. The other positive, particularly if you own your own home, is the value of those homes has been going up. So everyone's focusing on Sydney prices and Melbourne prices. Well, the Brisbane Gold Coast region hasn't been doing too badly at all. So over the past year, dwelling prices are up almost 5%. That's well above the decade average, and that's well above the rate of inflation. So home prices are rising in value, and that adds to people's wealth levels, adds to people's confidence about spending in terms of the economy. So you could see where the momentum is coming from in terms of the Queensland economy. Now, let's look at some of the other influences. The unemployment rate's coming down, so certainly in Queensland that's quite encouraging. The unemployment rate did get up to around about 6.5%, 6.75%. Now it's down around about 6%. And that shows you what's been happening in terms of the housing boom, that it is creating jobs, putting dollars into people's pockets, and sort of creating momentum and growth for the economy. One thing that we need to watch, as I said beforehand, is that population growth is slowing. So in past years, and you go back to the 80s, sort of at a time when New South Wales wasn't doing so great and Victoria wasn't doing so great, a lot of people said, look, let's go to Queensland. They're doing sort of pretty good up there. we had population growth or annual population growth above 3% a year. Now it's going closer to 1% a year. So if you don't have the people coming up from the southern states, you don't have the babies being born, the migrants coming to Australia, that means less demand for homes. It means fewer people around to be able to sell to as well. So we've got to watch this slowdown that we are seeing in terms of population growth. Now, as I said beforehand, across Australia, retail spending is actually doing pretty well. Queensland, not too flash at the moment, although what we would expect that growth rate to be picking up over time. So as these homes get built and the apartments get built, sort of invariably, sort of people are going to say, now I need things to go in it. I need, sort of new tables, a new big screen colour television, I need, curtains and carpets and light fittings and the like. So we will see a pickup in terms of spending once we do see these completions, sort of happening. So we believe that's going to be happening down the road. It's actually interesting in the business sector. The business sector is actually doing okay in Queensland. And you can see in terms of new lending that has picked up from the lows. It's not to the heights that we saw during the China mining boom back in 2007, 2008, but you can see that gradually over time the businesses have been saying, yes, we need to go out there and take on more debt. And of course, if a business is borrowing more, they're likely to be doing something with it. They're building new buildings, they're building new equipment, so they're expanding their firm. So this is an encouraging development that the business sector is certainly, sort of more positive in terms of the prospects, sort of here in Queensland. Now, we're doing okay, and that's replicated in the fact that wealth is at record highs. Now, whenever I say that, people look around the room and they say, it must be somebody else. So it must be somebody else. This is real income, it's not real income, it's net worth, so assets less liabilities per person. And you can see it's at record highs. Don't believe the figures? Well, take that up with the Bureau of Statistics, take that up with the Reserve Bank. They've both come up with the same sort of figures saying that we're doing okay. And look, if the value of our home is going up, if the value of our shares is going up, it hasn't been too spectacular, but certainly once you add in dividends, our shares have been rising in sort of recent years. Our wealth levels are at record highs as well. And clearly, if we were doing so badly, who is buying all these cars? Now, I think you like to see your car up there, don't you? So that's why I put Lamborghini up there. Clearly, that's what you've all driven. It could be Bentley or Porsche or something rather like that. That's what you've driven up here to tonight. I've got a 91 Falcon, so I don't know much about this. But it's clear that car affordability is the best that it's ever been. And that's why more and more people have been updating their rides. So if you want to find, so the happy business people around town, look for the car dealers, the new car dealers, because they're the ones sporting grins. And for the simple fact is that you're getting a lot more value for your money when you buy a car nowadays. Think about the cars back in the 70s, 80s and 90s, and think what goes into the car nowadays. We do that comparison about car prices and compare it with wages, and car affordability is the best that it's ever been. That allows people to trade up in terms of their cars. And of course, interest rates are super low. That adds to leasing as well. And that's but just another sign, just another indicator to show that the economy actually is in pretty good shape. Now, we are on the homeward run now. I'm going to talk about interest rates, exchange rates, the share market, and then we'll finish up. There'll be plenty of time for questions, and I think more time for drinks and canapes as well, which is probably more important than anything else that I've said tonight. Interest rates are at record lows. Good news? Well, if you're a borrower, it's good news. If you're trying to get some returns on your savings, you're putting money in the bank or term deposits or whatever it happens to be, you're not overly chipper about the fact that interest rates are at super low. And that's always the case. There are winners and losers with the fact that interest rates are at low levels. But where are interest rates headed? Now, ordinarily, you wouldn't expect the Reserve Bank to tell us, but they have told us this time. They've given us an indication of where interest rates have headed. What they've got is what's called an easing bias. That is that they're more likely to be cutting rates rather than hiking rates in future. And the Reserve Bank governor has said, well, look, we've got super low inflation. Inflation is under control. So because inflation's under control, if the economy was to lose momentum, lose speed, we could cut interest rates. We could run the economy a little bit faster because inflation's not a problem. But at the moment, we've got a good economy. So there isn't any rush for us to be able to cut interest rates. But what they're watching is that inflation rate. And a week from today, we will have the latest figures on inflation, consumer prices. And if they're super low, they're well below what the Reserve Bank's expecting, the Reserve Banks will have a hard decision. They'll have to say, well, perhaps we can cut interest rates again, and that will stimulate the economy. The other thing that they're watching at the moment is the jobless rate, because if unemployment started to rise, that would certainly be one reason why the Reserve Bank would be cutting interest rates. And they say, look, we don't want unemployment to rise. We want to give more opportunities for people. The big question is, if the Reserve Bank tomorrow cuts interest rates by 1/4%, how would you react? Would you see that as a positive? Let's go out there and spend, let's go out there and borrow. Or would you say, gee, I'm worried about that. I'm worried about the fact that they're cutting rates even again. The economy must be in bad shape if they're cutting interest rates again. And this is one of the problems that the Reserve Bank's got. We're at these low levels already, that if they cut rates again, it could have a negative effect. People might say, look, I'm not going to cut back on spending, I'm not going to spend more, I'm going to spend less because I'm concerned about where the economy is going. So those are the sorts of things that the Reserve Bank is thinking through. One of the other things it's thinking about at the moment is the Aussie dollar. The Reserve Bank would like the currency lower rather than higher, because they know a lower currency certainly helps our producers, our exporters, our businesses compete against imports. It's not happening at the moment. Now, the Reserve Bank understands what's going on. They know that the fact that the value of the things that we produce here in Australia, commodities, raw materials, iron ore, coal, the price of those has been going up. It bottomed out, sort of earlier this year, but since that period of time, it's actually been rising over time. And that's one of the reasons why the currencies have been rising. One of the other reasons that I mentioned right at the outset, the fact that US interest rates haven't been rising to the extent that what was originally expected, and the expectation is that it's going to be slow going on. Aussie interest rate cut, we haven't seen one of those, and it doesn't look likely unless inflation's super low. There was doubts about the Chinese economy, but they've been dissipated. So China's doing okay at the moment. Commodity prices have been rising. Australian economy's been doing well. More people have been coming to Australia, and that's creating demand for currency. So it makes sense, doesn't it? And that's why the Aussie dollar has been going up. And these are the sorts of things, if you're worried about the currency, so if you want to know where it's going, these are the sorts of factors that you should be keeping on the radar screen and thinking about. But as I say, Reserve Bank thinks it's a little bit sort of on the high side. We'll have to wait and see. One of the big changes that's happened more recently is China. China has said, look, we do want to make sure that there's a better standard of living for Chinese consumers. And we don't want the growth of the economy to be too significant so that there's pollution and congestion and whatnot. But in the last couple of weeks, they changed their tack a bit and say, look, we want a sustainable growth rate, but we still want a strong growth rate. And some of the steel producers have been scrambling to be able to get the iron ore, to get the coal, because things have picked up in China in the last sort of couple of weeks. You read the Financial Review today, read Angus Grigg, and he talks about that sort of change that's happened sort of just in the short space of time. Now the share market. I could put up some of these sexy charts showing sort of the volatility in the share market, how they've been going up and down and all over the place. But what I prefer to do is to focus on the fundamentals. The share market, if the share market's going to rise, what do you need? Well, you need the economy to grow. You need consumers to spend, you need businesses to spend, business revenues to rise. If business revenues rising, that should be reflected in the share prices for those businesses. And as a result, the share market should be rising as a result of that also. So what we've done is we have looked at Australian companies, their latest profit results, which were finished up at the end of February, and said, well, okay, let's see how they've done. We looked at all the top 200 companies, put them in a spreadsheet, added them all up. Lo and behold, 90% of those companies produced a profit for the last 6 months. So Australian companies have actually been doing very, very well. In fact, 85% of those companies have actually produced higher profits in the last 6 months period than what they did 12 months ago. So companies are making money. So what are they doing with it? Are they sort of storing it sort of in safes in their offices, in fancy buildings like this, sort of squirreling it away somewhere? Well, no, what they've been doing is giving it back to shareholders. So shareholders got to be happy in this sort of environment. 91% of those companies actually are producing a dividend. Good news? Well, it's good news for now, but eventually these companies are going to have to put some money back into their own business. Just like any sort of business, if you want to grow, you've got to basically replace equipment. You have to build new buildings. You have to think about mergers and takeovers. So at the moment, cautious businesses are giving it back to their shareholders, but they can't do this consistently over time. They're going to have to cut back to levels like we've seen in the past, around about 85% of companies producing dividends and not increasing dividends to the extent that they've been doing in recent times. Now, at this point in the presentation, a lot of people cheer up. Why? Because this is the last slide. Well, this is the last slide. Some people actually wake up at this point of the presentation. If that's the case, it's good to have you back. Economic growth last year, 3%. Pretty good growth rate. We're looking for a similar sort of growth in the Australian economy this year. Inflation, we do think that more likely than not, inflation's probably going to head its way higher. Why? Because the Aussie dollar has come down a bit compared with 12 months ago. And of course, a number of retailers, a number of businesses trying to pass on that higher cost. The difficulty, though, that businesses are having here in Australia about passing on higher costs is being replicated right the way across the globe. So this isn't just an Australian situation, it's happening right the way across the globe. What's happening? Well, nowadays, if you're going to go out there and buy some sports shoes, you could go to the local sports store, sort of here in Brisbane, but you could also go on the internet, couldn't you? And you could buy goods from other parts of Australia or from other parts of the world. So competition is much more global nowadays rather than local. And businesses know that. If they're going to put up their prices, potentially they're going to lose sales. It's not just sporting goods stores, it's accountants. Accountants, sort of know that we can go to India and get people to do the bookkeeping, sort of overnight. It's basically sent back to us, sort of the next morning. So accounting services also face that challenge. So many businesses are facing challenges at the moment, and that's why inflation is so low. And that's why, the Federal Reserve in the United States is actually taking its time in terms of lifting interest rates because of this change that's happening in the environment. We think unemployment will continue to go down. I've told you about interest rates. The risk is that we could see another interest rate cut. The share market forecast, gee, they're looking all right at the moment. Ask me tomorrow whether the forecast still hold. It could change, but at the moment we are on track. And that Aussie dollar, well, our currency gurus have re-looked at their figures and they're thinking what we could see is the currency staying in the mid to late 70s over this year. Good news or bad news? If you're planning that trip overseas, that's probably the best news you've heard all night. Though if you're in business or you're thinking about some of the companies that you're invested in and they're exporting to other parts of the world, you may be thinking a little bit closer about their prospects. One of the companies that we've seen that hasn't been doing too well of late is Qantas. The oil price is stabilising. They're talking about slower growth ahead, so they're talking about cutting back seat numbers, not the sort of environment that, so that you're going to see the Qantas share price going up. And indeed, sort of has softened over the last couple of weeks. Questions?
Do you believe official Chinese economic numbers?
Do we believe the Chinese economic numbers? Do we believe the Australian economic numbers? Do we believe the US economic numbers? It's a little bit like that. There is a degree of healthy skepticism about the Chinese numbers. Why? Well, let's think about it. It's a nation of 1.3 billion people. It's an economy which, in a lot of respects, is still very much an emerging nation rather than a developed nation. So to be able to get full statistics on an economy of that size is always going to be difficult. Now, they have improved their procedures over time. They've improved their procedures in terms of reporting, and the statistical methods that they're applying. But we still have to have a degree of doubt about, how well they're performing. One figure we can rely on, and that's the export and import figures. Why? Because if China's exporting goods, other countries around the world are importing those same goods. So you've got a bit of a check happening there in terms of exports and imports. And indeed, what we've seen from that, it gives us greater confidence that the Chinese numbers may be a little bit on the high side, but they're not too far away from what would be considered, normal, what would be considered, healthy levels. Certainly the Chinese economy does seem to have picked up in the last couple of months, and that's basically because the Chinese authorities want the economy to be growing at a faster rate. But you're right, so we have to look at those figures and have a healthy degree of scepticism about the figures. The thing is too, that if they've been miscalculating the figures, for 30 or 40 years, at least we're on the same basis. They've been doing, at least we've got, consistency, across the time.
Yeah, Australia appears to be in a good way in the sense that we've got relatively high interest rates where we can keep lowering them if things take a turn for the worse. What happens, not saying, if there was, say, another shock globally, those countries that have sort of next to no interest rates or even negative interest rates, what bullets can they fire, or how would they try and come back when they've had lowering interest rates to rely on, but now what would they do to stimulate growth?
Well, you're right. I mean, so we do have a degree of fat here in Australia. So we've got 2% cash rate. We cut rates basically 0.25% each time. So we've got a few more, shots that we can fire out of the gun and stimulate, our economy. Now, there's a number of economies around the world that are charging, charging, I suppose is the right word, negative interest rates. So negative interest rates are being adopted in Japan, in Europe generally, and some of the European countries, including places like Switzerland and Denmark, and the like. A lot of people say, how does that work? How does a negative interest rate work? Well, let's think about it. So you've got $100 today. In 12 months' time, you may have $98. And a lot of people say, well, how's that different to normal? And I say, no, that's fees and charges, which is the difference there. What we're talking about is negative interest rates being applied. But effectively, if you just leave your money in the bank, you're going to be charged for the privilege of doing that. Now, what they're trying to do, what they're trying to encourage people to do, is not just leave their money idly in the bank, that they are looking for opportunities in other markets, whether it's the housing market or the share market or whatever asset market it is, to try and grow that revenue a little bit. If you're at negative interest rates, you could actually go to even bigger negative interest rates. In other words, that hurdle rate is even higher. That deterrence about just leaving your money in the bank is even higher. But we are getting to the point where monetary policy is pushing on a string. It's harder and harder to stimulate the economy. You can put dollars in people's pockets, but you haven't got to make them spend. And indeed, what we probably will need to do in the future, if there's more crises, we'll have to look at things like fiscal policy or budget policy. So it's reducing taxes, research and development, grants, so giving people effectively, $2,000 or $3,000, like in the global financial crisis here in Australia, giving people the ability to be able to spend money, doing things like we did here in Australia, where we basically put money into the education system, and more infrastructure was built. Unfortunately, that wasn't done really efficiently. So when that was occurring, some schools got an extra canteen, which they could have probably done without. So if those things are done well, so that means that there is people who are building things, there are more dollars in their pockets, and that creates spending across the economy. So there's still things that we can do, but you're right. So we're at fairly unprecedented times in terms of where the economy is.
Mining industry has been a significant contributor to Australia's economy in the past for a long time. That's reflected in the share price and everything. They're greatly diminished at the moment. where do you see the replacement growth industries coming in Australia? It's going to be, those areas that's going to contribute to Australia's economy. It doesn't seem to be the mining.
So the question about the mining sector, it has been a really big contributor to economic growth. What are going to be the industries that are going to take us forward, not just in the short term, but in the longer term? Well, mining, for a long period of time, before China came along, mining was a relatively small and stable proportion of the economy. Then we had the mining boom. China came along and they said, well, look, we need to build all these things, roads and bridges and dams. We need steel. As a result, we need your iron ore and coal. And all of a sudden, almost overnight, they said, just give us everything you've got. Clearly, the prices were so low over time that there was no price signal for BHP Billiton and Rio Tinto to be able to produce that. So it took time for us to catch up. Now we've caught up. So now supply and demand is more or less, in balance. So we did have this mining construction boom, more mines being expanded and being built. Now we're coming back down the other side. So the mining boom has finished and we're going to get back to, again, mining being a relatively stable proportion of the economy because prices have come down. So what are the new industries? We're to remember that Australia is very much a services economy rather than basically a mining economy or an agricultural economy. So over time, the economy has changed. Now the big drivers in terms of our growth, what is the biggest employer in Australia? It's the healthcare sector. Another big employer is the retailing sector, the education sector, the construction sector. So these are the big employers in Australia, and they're the ones that are actually going to take us into the future. Tourism is a big employer and a big driver of our revenue coming through. Agriculture over the next couple of years is going to see brighter times, and that's because we are moving into what our ag economist has called the dining boom as opposed to the mining boom. The dining boom is basically when Asian incomes are rising, and Asian incomes are rising, they tend to consume different sorts of food. So rather than being a rice-based diet or agrarian-based diet, they're taking on things like beef, pork and chicken, seafood and the like. So, and a lot of those sorts of things can be produced here in Australia. So we're at that time when we can really benefit in the agricultural space in rural and regional Australia from the higher income levels that we're seeing across Asia. It's the fact that tourism, if you've got more disposable income, you're more likely to travel. And we're seeing more and more tourists, not just from China, but from Asia or more generally. Education. We've got one of the highest quality education systems in the world. So where are the Asian students coming from? Asian students going? They're going to places like Australia, the United States and the UK. So we've got to benefit there. So there's a whole range of areas. A lot of people say, well, what about manufacturing? Can't we have a manufacturing industry? I was in Albury, as I said, at the beginning, and there was a manufacturing group. They deal with motors, Briggs & Stratton type motors, which they import from the United States, they modify, and then they send out those motors to other parts of the world, like Papua New Guinea, South Africa and Asia. And they said last year they had their best year ever. And it's likely that this year they'll probably have an even better year. So this is a relatively small-scale niche manufacturer doing very, very well. And that's where we'll see the opportunities in terms of the future. Niche manufacturing. Manufacturing which is designed to be able to fill the needs using our expertise and our acumen. We haven't got a huge population here in Australia, so we can't support some of those high-level industries like car manufacturing, but certainly we can produce at the niche level, very, very high-quality goods and service those to the other parts of the world.
So can I ask, Craig, so following on from that, it was for quite a while, our stagnating or still growth was because that lag, those other parts of the economy hadn't yet kicked in?
Yeah.
Closing, that gap, is it short?
Oh, well, we've got 3% growth in the Australian economy at the moment. As I say, I mean, sort of, when you look at the long-term average, 3% growth is a pretty good growth rate. When you compare it with other economies around the world, 3% growth, sort of is what a lot of other countries would give, sort of their eye teeth for. I think Spain, and they're coming off a low base, has got a stronger growth rate than us at the moment, but there's not too many other countries that are seeing that sort of thing. And of course, there's always going to be the economy doesn't move like that. It would be wonderful if it did, so it just went like that, no blips, around the place. But yeah, the mining sector turns down, and there was, sort of a bit of a gap before the dwelling sector picked up, and we had to cut interest rates a little bit further to be able to generate, so that growth. And unfortunately, that's kicking in. Unfortunately, as is always the case with things like economies, they don't grow at a smooth pace. So all the investors decided, housing, that's where we want to be. And the regulators have had to slow down that pace. So we basically got irrationally exuberant in terms of our demand for Australian real estate. So yeah, there was a little bit of a lapse in terms of it, but it does look as though that more industries now are moving ahead at the same sort of pace than what they were in the past.
Great. Foreign investment. We were just talking about housing. Got any sort of commentary on that about housing and foreign investment?
Foreign investment, it's a good thing. Yeah, that's my word on it. I mean, we've got a big nation or a big landmass. We've got a lot of resources. Sort of here. There's a lot of resources that the rest of the world wants, and we do need sort of the foreign investment to be able to tap into it. In terms of our real estate sector, it's a case that what Australia has that a lot of other countries don't have at the moment is population growth. So we've got something like 1.4% growth in our population. It doesn't seem huge, but it's amongst the fastest in the industrialised world. If you've got more people coming to your shores and more babies being born, clearly you need more demand for homes. So it represents a great opportunity, and investors are looking for opportunities around the world. And they're looking at Australia and they're saying, here's an industrialised nation where there's greater demand for homes around there. And for a long period of time, we weren't producing enough units and apartments. Now we are. So investors around the world are looking for those opportunities. China and other Asian economies, they're saying, well, look, in the future, perhaps we want our children to be going to school in Australia. So buying a place here in Australia is probably a good thing to do. Sort of gives them somewhere to stay. Some of the Chinese are also thinking about the future and thinking about, well, things go pear-shaped in China. Sort of, where do I want to live? So it's not just here in Australia, but it's the Auckland market, it's the Vancouver market, it's the Seattle market. The Chinese are saying, look, perhaps I need to have another bolt hole, sort of, and that's happening as well. But it's not just, sort of the Chinese, it's the Singaporeans, the Malaysians, it's the Germans that, sort of, who are investing, sort of in our real estate because they realise that, sort of, it's a good opportunity. What we need to do is to make sure that Australian buyers aren't being pushed out from it, and that's where we've had very, very poor information for a long period of time because we haven't had this sort of boom in terms of foreign investment. Now we've got greater controls and greater scrutiny about where the dollars are coming from, so we can make sure that sort of it's all very much above board.